finally time, ladies and gentlemen. Today is the day where we're going to break down my favorite stock in the stock market currently, which is, of course, Disney. As you see, the stock market was up as a whole. I believe it was up around 300 points today. So as you see, I'm up $13 in every single one of my stocks besides Tapestry and Nokia, which aren't. Tapestry is a pretty big share. Nokia is not necessarily. But this video is going to be about Disney. There are a lot of, Disney's one of the biggest companies in the world, but there are not a lot of videos on YouTube about the stock as a whole. So I'm hoping this will help you guys when you go to invest in Disney or don't invest in Disney. It's up to you. So go ahead and smash the like button, leave a comment below what you guys think about Disney, and like I say, please subscribe. So let's take a look. As of today, the stock is at $136.55. It's up $2.06 on the day. Over the week, it's been right about steady. Over the month, it's down $10. Over the 3 months, it's up $5. Over the year, it's $23. As you see, it's jumped quite a bit since March and April, and I believe that was when they shared their earnings. And over the past 5 years, it's up $45. If you could have gotten Disney at $83 a share, and I'm sure it was even lower way over here, that is an insane price for Disney, granted, or at what it is now. So as you guys see, I have 2 shares of Disney with a portfolio diversity percentage of 18.92%. And there's total returns. My total equity in Disney is 27.1 or $273.10. That was the weirdest thing I've ever said. Okay, as we go down, of course, the CEO is Bob Iger. Market cap of $242 billion. That's billion with a B. That is absolutely insane. PE ratio of 16.96. If you guys don't know what that is and you'd like me to make a video on it, let me know in the comment section below. But essentially, it shows you how much money you'll need, how much money they'll need to earn for you to earn money back on your dollars. A dividend yield of 1.44% for a company of this size. That is a very low dividend yield, and we'll take a look at payout ratio in just a second. They have 201,000 employees, founded in 1923. Everyone knows what Disney is. They have parks, they have movies, they're massive in the box office currently. They have, they just acquired Star Wars. They've had Star Wars. They acquired Fox. They're acquiring everything. They just got Hulu. They're coming out with a streaming service. They're doing all sorts of things: media networks, park and resorts, studio entertainment, and consumer products and interactive media. Again, this is one of the biggest companies in the world with a 71% buy rating and a 29% hold rating on Robinhood. So, as you see, they beat their earnings every time except for maybe this one. Don't entirely know what happened there. Their dividend, I got paid their dividend July 25th, which coincidentally, I was actually in Disney World at that point in time. I got $1.76 for 2 shares of Disney. And now I know what you're thinking. That may not be the greatest thing in the world. And you're right. But let's take a look at the dividend payout ratio for Disney. So their earnings per share were 97 cents. And then their dividend was 84 cents a share. So this comes out at a payout ratio of 43.08%. That is an insanely low dividend ratio or payout ratio for a company of Disney's size. And if you guys want me to make a video on payout ratio as well, I can do that for you guys, break that down from a more fundamental standpoint. And I just brought out a little Cat Murphy. That was weird. But again, Walt Disney's dividend payout ratio has consistently been low. It's one of the lower dividend payout ratios you'll find amongst companies this big, which is why I like it, because it has a lot of room to grow. Let's take a look at Yahoo Finance, break this down a little bit more. So market cap, massive. PE ratio, we covered that. Okay, let's take a look at the financials. As you see, the 52-week range was 100 to 147, and it was up to 147 relatively recently. I don't know. Well, that's today. So, I mean, it was up to 147 not even a month ago. So, let's take a look at the statistics on Robinhood, or not Robinhood, Yahoo. Anything important here that I want to discuss with you guys? nothing super. Let's break this down a little bit further. Let's go to the financials. So the gross profit, as you see, has been increasing since 2015 consistently, outside of this. So they went from 24 million, I believe that's billion, 24 billion to 25, almost 26 billion, back down to 25, up to almost $27 billion. Okay, that's gross profit. So let's keep scrolling. Operating income, net income, and then let's look at the net income. So from 2015, they made $8 billion in net income. 2016, $9 billion, back down to $8 billion 900 million. Okay, still insane. I get it, it dipped, so they clearly had a down year right here in 2017. I believe that's what that is. Yeah, 2017, up to almost to $12.5 billion in 2018. Look at the jump. Look at the jump. That's almost $4 billion. $4 billion jump in net income. That's insane. That's one amazing thing you want to look at when you're looking to pick stocks. Let's go over to the balance sheet. Current assets. Total current assets, $16 billion worth of current assets. Well, I guess you go even further. They have almost $100 billion in assets. And that's consistently grown, as you see, year over year. Total current liabilities of only $44 billion. So you compare this $100 billion to $44 billion. That is a wonderful thing to see in the finance world. Going further, net tangible assets of $10 billion. That's a crazy jump from here to here. Again, I don't fully understand what happened here in 2017. I'll have to look in a little bit further on that. But we're going to scroll over to cash flow. As you see, there's net income again, about $13 billion. Keep going, looking for the important things. Cash and cash equivalencies. So as you see, they were negative here and $91 million in cash and cash equivalencies. What that means is they have essentially money sitting around that can be liquid for them to use. So that's a solid number, maybe not of a company of Disney's size, but as you saw the net income right here, 12 billion, and then you saw the current assets over almost $100 billion in current assets. So let's go back to Robinhood real quick. This is a stock that I feel like people are slept on. I think they know that Disney's a good stock, but that's as far as they go. They're not willing to elaborate on it, which is why I don't think you see a lot of videos on Disney in the stock market on YouTube, you know. This is a stock that I'm very bullish on. Again, this is my favorite stock. I do see this. I've heard things from Disney going up to 120, and I've heard it dropping lower in a potential of an economic downturn. I do believe that this stock, Disney stock, at some point in time could reach $200 a share. And at a price of $136 a share, you know, it's a little steep right now. I believe it should drop a little bit lower. And as you see, you know, it did drop to almost $130 a share. I think $130 would be a great buying point for this stock. So if it does drop a little bit more beyond $136, but there is the streaming service launches November 12th. Disney Plus launches November 12th. And I do see this stock going upward at least $10, $20, at least $20. So I believe this stock will settle right around $170 for the year, maybe $160 if I'm being modest. But even that $24 from where it is, that's still tremendous upside. And remember, it pays a dividend that has plenty of room to grow. It pays a dividend that has plenty of room to grow at 1.44% dividend yield. So again, this is a stock that I'm very bullish on. I believe you guys should invest in it, or don't, you know, more Disney shares from me. It's so leave in the comment section below more stocks that you would like to see me break down, and I will do those in a further video. And again, if you want to see a PE ratio video as well as a payout ratio video, I can do that as well. There will be a free stock link in the description, and like I said, please like, comment, and subscribe. Comment what your thoughts are on Disney, and if there are better stocks, please let me know. And in the meantime, happy trading.